Tesla and Ford are two of the most widely talked about car companies. Why? Well, there's a myriad of reasons of why they're being talked about. And as an investor, where should you have your money? So this video is really going to dive into what's going on behind these companies. And again, as an investor, where should you be putting your money? Let's just get right into a couple of the web stories that I have. And this is a telling one. Tesla to feel commodity cost pain until the second half of 2023. Recently, I did a Tesla video on our YouTube channel right here, and I got a couple of comments. People were talking about, maybe I don't know what I'm talking about because this is exactly what Tesla wanted to do. And wait a minute. Part of the problem is I think that Tesla is cutting costs, and they cut costs 6 times so far since January to spur up more sales. And well, is it happening? Sort of, kind of, but at what cost? The cost is biting into margins. And if they're cutting prices as much as they are in the short amount of time that they are, and they're going to tell me that they're still meeting margins, then that means that those cars were way out of price, way out of whack. And that tells me a little bit something about Tesla. That's just a side piece in regards to that. So one of the comments that I had happened saying that, well, because the commodity prices are coming down, they can afford to do that. Well, can they? Let's look at that. Let's examine that. As I look a little bit at this story, Chief Financial Officer Zachary Kirkham said on Wednesday that the battery material prices have been a big drag for the past 2 years, and Tesla was still kind of at the maximum of paying commodities in our cost structure. Tesla has slashed prices 6 times, a move that Wall Street expect will amp up competition with incumbent automakers such as Ford, which is the other part of this story, and startups like Lucid. We also have Rivian. We also have NIO. So far this year, prices of battery materials such as cobalt and lithium, the most important ingredients in EV batteries, have declined around 50 and 40%. That sounds really good, right? Respectively, nickel has lost about 20% this year and is down nearly 50% from the peak in March 2022. So the comment that was made about the bring down or the lowering in the commodity should help Tesla be able to lower the prices and still maintain margin. All right. Analysts attributed the lag of benefits from a lower battery material cost, long-term contracts, especially for lithium, which is bought at rates that vary in spot prices. The problem is with this is a lag. So yes, these materials are going down, which will make it less expensive for them to build the cars. But this is short term. These contracts are being bought further out. They haven't matured, and they're not getting the benefit of the decline in these commodities as of yet. Lithium prices have eased following the ramp up of mining output and slowdown in EV demand due to rising economic uncertainty. And I've done a video. The demand is actually going up even in this economic uncertainty because people are looking to make a lesser carbon footprint on the environment. The world's biggest, fastest, blah, 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 blah. The majority of this story, as I just laid out, is that, yes, the commodity prices are going down, but not fast enough to accommodate the price cuts that have occurred since January. So I put that out to someone who was letting me know that Tesla could afford to do this. I think that Tesla overall is a good stock, but it's still, right now, short term, probably not a good play. Let's go to the Ford story. Ford bringing the F-150 Lightning to Norway. Let me back that up a little bit because you remember, because the demand, remember that the story I just talked about was the decrease in demand. The demand was so high for the F-150 Lightning that they couldn't keep up, so they stopped producing the Lightning. So I got to go against the demand story. The demand is there, especially in the EV space. The demand is there enough that Ford had to stop producing it, and then they started reproducing it again. And guess what? They started producing it at a higher price. Why? Because inflation is a problem. So that is part of the backstory in regards to what's going on with both of these companies. Ford says, well, I'm going to come back out, but I got to do it at a higher price. And Tesla on the other side is going, man, we're just going to keep lowering the prices. We're going to get and build up sales on the car. Now, there's another bad side to the Ford. Now, I like that F-150 is being brought to Norway. He's giving more of an international footprint on their electric vehicle, and that's a good thing. Here's a bad thing. Here's a bad PR story. Ford F-150 Lightning fire footage highlights a growing EV risk. New video footage of a fire that started in the Ford F-150 earlier this year highlights an emerging concern regarding the adoption of electric vehicles. We had all of the flooding in a storm, and a lot of these EVs were rendered useless because of the water and the batteries didn't mix up too good. So there is the growing risk of fires and things of that nature, and we'll have to follow that story as it goes along. But this, even though Ford is reaching out outside of the United States as an international company, already an international company, but this could be a downfall or a downplay on all of the EVs. So again, something that we'll keep our eyes on. And then more ammunition to the story that I am still perpetuating in regards to margins and Tesla being able to meet margins. Tesla stock sinks as price cut hits profit. They're backed into a corner. Now, this could be a doom and gloom story, all right? I'll admit to that. But another comment was, well, if they are becoming more efficient in building the cars, maybe that helps them to streamline and be able to cut the prices. Folks, cutting prices this much in a short amount of time has got to eat into profit margins. I don't think you can get around with that. Whether it's the commodities, whether this is the efficiencies, prices are going to decline. As an investor, what are you going to do? Well, you might pull out of the trade right now short term because you don't want the short term pain. Long term, though, and talking about long term, let's get right into the software. Long term, though, I still like Tesla. I think it is a fundamentally sound stock. But in order to boost sales, they are cutting into profit margins. Investors are seeing that, and investors may be pulling out of it to a certain degree. I'm looking at the stock trading at 165 with a value of 143. Stock is overvalued. Not ideal. I'd rather have you in an undervalued stock. But it is overvalued. It just means that people are willing to pay a premium to own the stock. Ford trading at 1177 with a value of 939. Again, overvalued. People are willing to pay a premium because Ford is a company. It's not a fly-by-night company. It's been around for a long time. So people are still investing in it. Well, you see the price disparity between the two. Well, that goes back to Tesla being able to sell the cars for as high as they are. And if they're saying that they're still meeting margins right now, that means the price of the cars will way overpriced. And that does open my eyes in regards to the type of company that Tesla is, if that's the fact. Tesla does have good upside potential. It is a safe stock. Fundamentally, I will not deny it. Fundamentally, it is a sound stock. Short term, though, RT is below 1 and at 60. The stock is in a downtrend and it's a sell recommendation. So the short-term pain is in play right now because of the lowering of the prices over and over and over. Does it have a chance to rebound? Absolutely, but this is probably not the right time to be playing Tesla unless you're playing it short. You can look at a ticker symbol TSLQ to play Tesla to the downside without having to spend $165 per share. Looking at the relative value and relative safety on Ford, it's more of a speculative play. Even though it's been around a while, it's still more of a speculative play. Both of them are below the value of 1. RT is below 1. It's not a sell recommendation, but altogether not a good play right now. And I think that the supply issues that happen with all of the EVs affected Ford in an adverse way. I'm thinking that the PR about the fire in the Lightning is not a good thing right now. It's not a good look right now as well. Notice that Ford has got a negative earnings growth rate. And again, as much as I like Tesla as a fundamental stock, growing their earnings at a clip of 35% a year. But is it getting lower? Let's do this. Let's put up a graph of these two stocks. All right, and put it on a 6-month graph. Here's my two stocks. There's Tesla in a downtrend. Look at that, trending lower. Let's go put this on a 1-year graph. There we go. Look at that on a 1-year graph. Look at the downtrend starting from September 13th of 2022. Look at the big drop with the earnings that came out back below the downtrend. Now, what I do like about the stock going down is it's got some upside potential. I like the idea once it gets below this level of my value, this is my intrinsic value sitting on Tesla right now at 143.91. I think that the last time that happened, the stock, people saw that it was on sale. Boom, the stocks took off, but stayed below this downtrend. Interesting. You know why? Because the move of the market. The market overall, I think, has got a lot more downside than upside because of the way of the economy. And if the market continues to move down or starts to move down, 80% of the stocks in the market will move down with it. And I think Tesla is going to be amongst those. What I'm really looking for is if this level of a support can hold, the low price here is 101.81. That's my profit target to the downside, firstly. Secondly, if we can get back below the value, that would be a good play for big money to start putting more money back into it. Just now is not the right time. I think that, and not talking about earnings or talking about margins, look at the earnings growth rate. The earnings growth rate over the last year is falling. All right, the company's still making earnings, but they're losing in regards to growth. Again, that goes back to margins. Earnings per share leveling out. RT is below 1. Stocks in a downtrend. Folks, I'm not trying to scare anybody. I'm not trying to, go against anything. I'm just giving you the word as I see it, the news as I see it, the facts as I see it. And no matter what you think about what I do or don't know, that's it on paper. You'd handle it the way that you want to. Let's go to the next stock, looking at Ford. Same kind of scenario, in a downtrend since, let's go see what the date is here, 8/17/2022, back and forth between being undervalued and overvalued. We like you to be in undervalued stocks because price tends to rise to meet value. Notice that when it is overvalued here, price falls to meet value. And I think that the price has the opportunity here to fall to meet value again. Value on Ford right now is at $9.39. It's trading at $11.77. Same scenario, earnings growth rate falling. In this case, though, earnings per share is falling. So, and RT is below 1. If I had to make a choice between the two stocks, of course, I would choose Tesla. But I think short term on both stocks, the pain has not been met yet. It's not been enough pain in either one of them as of yet. But that's really what's happening. In Tesla lowering the prices, creating this competition and everybody else trying to lower prices, there's got to be a turning point at some point, and these companies can't continue to lower prices to bolster sales without eating into margins. And if you eat into a company's margins, your investors will see that and they will wait for a better opportunity. They will pull their money out and wait for a better opportunity to buy once again. Folks, this video is over. If you like the content, hit the like button. If this is your first time here, subscribe to the channel. This is the kind of information that we strive to bring to our subscribers to keep you well informed. Not to push any agenda, but to keep you well informed on what you can do as an investor. Folks, until the next time, see ya.